Hi, I'm Jimmy. In this video, we're going to look at consumer confidence, why it's so important, what we do about the fact that it has fallen a ton in a fairly short period of time, and ultimately how we can invest to help us get around the fact, or hopefully try to get around the fact that consumer confidence is very, very low right now. Now, I actually came up with this video idea as I was prepping for our monthly bulls versus bears, where we analyze a bunch of different economic indicators, and I noticed how much consumer confidence has been falling. Now, just so we're all on the same page, consumer confidence ultimately measures the financial prospects of the average consumer in the United States, which is basically their willingness to buy and their willingness to spend money on discretionary items. Now, we might ask the question, where does lower consumer confidence come from? And we can see that we're at one of the lowest levels in about a decade. And based on the polls that I've been reading, it appears that many consumers, their biggest concern right now is higher inflation. Now, the offset to that is wages have been increasing on average, but they have not increased as much as inflation is increasing, which is up over 7% right now. And because of that, even if you did get a raise, well, it likely did not keep up with inflation. So that could be a problem. Plus, the stock market has struggled this year, so that helps explain some of the additional dip that we see right here. The other potential issue is that interest rates are expected to go up in the not too distant future. So these are some things that have been driving consumer confidence lower. Another driver of lower consumer confidence is that interest rates are expected to go up over the course of this year. So that's going to be another reason for consumers to possibly hesitate with spending some additional capital. Now, this brings us to the question, what makes consumer confidence such a big deal? And for that, I think it's best if we look at GDP. So this is the basic formula for how the government calculates GDP. And we can see that I was able to find some basic numbers for each of these. And basically, when we look at these numbers, the one that we care the most about is the private consumptions. That is how much the consumer spends. The US consumer is the key driver to the US economy. If the US consumer stops spending, the US economy practically stops. Yes, government spending there is government spending in all of this, well, mostly government spending here, but that is only a piece of the entire puzzle. When we look at it from a percentage standpoint, the consumer contributes more than 2/3 of the overall economy. So having lower consumer confidence, if that in fact leads to less spending, which is the long-term fear, that's the reason we would analyze an economic indicator like that, well, that could become a real problem for investors. That being said, if we want to try to protect our portfolio a bit, where can we go? So the investments that I think could do the best are investments that, in theory, don't rely on the consumer. First, I think that one of the three choices, I'm going from third to first. I'm actually going in order here. I think the third most interesting choice is General Dynamics. General Dynamics is a diversified defense company. And as we might guess from that it's a defense company, most of its clientele are governments, mostly the US government. Well, right now, using our discounted cash flow calculator, it looks like it is undervalued. We're getting a fair value of $249. The current stock price is at about $213. So it looks like it's a decent buy right now. And again, this could be a very solid defensive stock to own. So this is a pretty good one. My next favorite is, punching it in our calculator here, is Lockheed Martin. Now, this is a stock I actually already own, and I personally own it, and I'm up about 15% or so far in this stock, but I just want a full disclosure that I already have this stock, but the point remains the same. Again, this is a company that makes weapons. It's a defense company, just like General Dynamics, and the vast majority of their revenue also comes from government contracts. Even if the consumer stops spending, a stock like this could do very well. So even with the stock market pullback in the first few months of 2022, well, this stock is still up about 15% for me since I last bought it. Right now, it looks like it could still be undervalued. Currently, it's priced at $382, and the fair value we're getting is at $436. So overall, this is another one that I think is really interesting. Okay, last and final stock. Okay, this one is HII is a ticker symbol. Punch in our calculator here. This is Huntington Ingalls. This is a company that makes nuclear submarines, ships. They build them, they maintain them. Again, most of their contracts are with the governments or with different governments, the vast majority of those being the US government. Now, this is a stock that I do not own, but I only didn't buy it because I already owned Lockheed Martin when it was brought to my attention in our investment community. And we can see that the current stock price is $180. This is why this is number one for me, $180. We have the fair value at $319. The company's using the company's cost of capital, which is a more textbook way of valuing a stock. Well, it's valued at $365. By the way, if you're curious, that is higher than my $319 because it is a lower required return. If you need less of a return, you can pay a higher price. So that's why that price is higher. But even if we use 10%, well, the stock is still worth $184. So our annual return could be more than 10%, assuming we paid less than $184. So overall, this is a stock that looks like this one could be very, very interesting to own over the long run. And given where the consumer is, and given that we know how important consumer confidence can be to the broader economy, again, it's more than 2/3 of the broader economy. Well, it could be a smart move if we do the research to consider adding a defensive holding in our investment portfolio. That being said, if you're curious how to get access to this investment calculator that we're building here, it should be up in the next few months. We're expecting by the end of the second quarter for this thing to be up and running. We're putting up a website that you'll be able to punch in your ticker, basically do exactly what we did. You punch in a ticker, you hit calculate, and the whole thing spits back what the return is. You'll be able to customize it so you can add your own required rate of return. You could do all sorts of things with it. Our goal is to make it a website in time that will be a quick and easy place for everybody to value stocks and do all their investment research. Now, if you sign up today, even though the website's not up and running, you get access to our investing Discord. We do 3 private live streams per week. And once you do that, once you sign up, the price you sign up at will be locked in forever. So even if we were to increase the price, once the calculator's up and running, your price will never go up. Forever, it'll be locked in. So if you'd like to sign up for this, I will leave a link over here. I will leave a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.